you make of this frenzy of retail trading activity and just how sustainable it is?
Well, I think it's very sustainable. I believe that these kind of markets where there's lots of movement attract retail investors who both are investors and are speculators. You have both types of investors in the marketplace. And if markets are just flat or trending very, very slowly, you don't get a lot of speculative action. These markets create more speculative action, which is driving the great rise in retail investors.
To what extent, David, do their early trades need to be successful for them to be long-term, active, engaged traders?
I think it's really important because otherwise they run out of money. A lot of these retail investors don't have deep pockets. We saw this years and years ago at Schwab, where investors had relatively thin portfolios, and they ended up investing. They ended up investing until they couldn't invest anymore, and that usually happened when they lost their money. Hence, Schwab's movement toward mutual funds and ETFs and trying to offer more managed portfolios for all kinds of investors, and hence our effort at Magnify to try to help investors invest more intelligently than ever in those kinds of products.
So what exactly are you doing for investors at Magnify? And how's it different than what you did in terms of democratizing all this for individual investors at Schwab?
Well, what we did at Schwab was we democratized access to a huge range of investment choices. But what Magnify is doing, Magnify is using natural language search to make it possible to find exactly the fund, the ETF, the SMA, whatever it is you're looking for. We allow you to find that. Let's say you want an emerging market fund with low volatility, or you want a high-tech fund that specializes in artificial intelligence. How would you even find those kinds of products today? Magnify enables that kind of search. The power of natural language search is extraordinary.
David, pivoting back to Schwab and its peers, initially a year or two ago, when Robinhood entered the market and was offering commission-free trades, it was assumed that was a bad thing for the legacy players. But as we look at the marketplace today, do you think this has been a excuse me, and this has been a net positive for the likes of Schwab in that the bigger players ultimately will get through the price war and end up with a bigger share?
I think so. I think the move towards zero commission trading is what created the opportunity for consolidation in the industry. And Schwab, as you all know, is an extraordinarily well-run firm. And the combination of Schwab and Ameritrade is a killer combination that is very competitive. Now, the industry is still competitive with Fidelity and E-Trade and other firms and the Robinhoods of the world. But I believe that this kind of consolidation strengthens those who have the scale to execute well on top of this trend.
David, thanks so much for joining us.
My pleasure.